I am doing well, sir. Just living in the home office right now.
Yeah. I've got my quarantine haircut going on here. I'm glad we're not doing this 2 weeks from now. I might be
You'll be poofy.
Might be full on Beatles haircut in a minute here, like I was in high school.
I hope you've got some trimmers to at least take care of that in the short term.
Absolutely. Well, I think we got a lot to talk about.
I think so too. Thank you for doing this.
Yeah, absolutely. So you know what? I guess I'll just kind of dive in on what's gone on really over the last 30 days.
Okay.
In the lending industry, if we want to go that far back. We had at the beginning of this month. That's when you started hearing the news of the Fed was lowering their rates, which doesn't really have an impact on. It doesn't have a direct impact on mortgage rates. That's the federal funds rate basically controls the overnight lending between banks, right? So if I'm Bank A and I need some quick cash to lend to my clients, I can go to another bank and say, hey, lend me X amount of money, X amount of dollars. I've got these assets here, and we're gonna, and they'll trade back and forth. They'll lend each other money. That's basically what the federal funds rate dictates, right? So, sometimes when the federal funds rate goes down, mortgage rates actually go up. Sometimes when the federal funds rate goes up, mortgage rates also go up. So it doesn't really jive. So honestly, we get. My phone starts to blow up whenever the Fed lowers the rate. Every client that I've closed in the last 2 years saying, hey, mortgage rates are going lower, right? So let's refinance. Sometimes that's true, sometimes it's not.
What's the best way to know whether or not it's gonna play out that way? I understand they're not directly correlated. So if somebody is watching the news and they see, hey, the mortgage rates or interest rates went down, and they're talking about, the news head is talking about the Fed rate, then how do they know if that applies to mortgages or not?
Sure. Honestly, it would be difficult to understand that. Honestly, probably, I wasn't making fun of my past clients. You probably do need to make a call, right? Send a text, make a call, say, hey, how is this affecting mortgage rates? Because it does change so often that you may find yourself in a position that you can do a refinance there, or maybe it's time to purchase or something like that. But it's basically how the market reacts to them lowering the federal funds rate. So if the market sees it as inflationary, then mortgage rates are going to go up because people aren't going to be buying mortgage-backed securities. Mortgage-backed securities are bought and sold just like treasury bonds are and just like stocks are. People buy them and sell them on the secondary market, and that's what causes our rates normally to go up and down. And when we saw earlier this month, mortgage rates were at a 50-year low, right?
What was the lowest that you closed?
The lowest I was able to lock in was 2.675 on a 30-year.
Wow.
That was a record for me personally. I remember 5 or 6 years ago we were doing them at 3 1/8, 3 1/4, something like that. But I've never locked in a 30-year under 3 before. That was pretty crazy.
Yeah.
Actually going to be closing one next month that we had just a long-term lock on that we were able to get that in. But the problem lies I guess it's a more complicated matter as far as why, even though mortgage-backed securities are at an all-time high in yield, why that doesn't translate to mortgage rates going even lower like it normally would. And the problem is liquidity. We're also dealing with a pandemic, right? That's sending the economy into shatter. I mean, we had 3.28 million people file for unemployment last week.
Yeah.
The record in our country was set back in the 80s was 695,000 in a week. We had 3.28 million.
And that's coming off of record low unemployment.
Yeah, it is. And honestly, A lot of people think that we just found out how many people or how many unemployment claims the federal government is actually able to process. There's more. We think this week is going to, this next week when the report comes out, it might equal what happened this week. So it's definitely a scary time. But what happens is banks also don't have an unlimited amount of money, right? A lot of times, a regular Joe that doesn't know much, doesn't deal with banks as often. A lot of times people see these banks as this, institution that's got an unlimited amount of money that they can lend freely. And unfortunately, that's not the case. These refinances, everybody went in to a refinance earlier this month, right? So there were so many applications going in and so many locks. Well, these mortgage banks or, regular bank, depending on who you're refinancing with, they only have so much money to lend. Mm-hmm. And when that happens, they basically run out of space, right? And they don't have the ability to process any more loans, which is a big problem. You also run into, when again, I don't want to get into the weeds, but you run into issues that, like, let's say a bank, right? So let's just say U.S. Bank, just for a good example. U.S. Bank, let's say they hold, a big chunk of mortgages at a 4.25% interest rate, right? So they have this portfolio of mortgages that are being serviced and people are making their payments on time and stuff like that. So these portfolios have a value to them. And what U.S. Bank does, they don't just sit there and collect those payments and have it there. What they do is they borrow against it. It's an asset. Just like you would borrow against your home or, borrow against another asset that you have, borrow against your 401k. U.S. Bank will take that portfolio of mortgages and it's worth something, right? Over a 5 to 10 year period, that portfolio has got value. And what they do is they go out and get a giant credit line from different lenders with that as collateral, right? And so now they have all this extra space and they can fund more loans and they can do it over and over and over again. Mm-hmm. When rates plummet like they did, I mean, I went from like in process, I had a loan unlocked that I pitched at 4.25, that the rates plummeted so quickly that I locked them in at 3.25, like a week later. It was that when it plummets that fast, everybody's refinancing. So that portfolio of mortgages that they had at 4.25, even if they refinanced every single one of them, now it's at 3.25 and it's worth less. And so the bank that gave them that massive warehouse line, I'm simplifying this, but that gave them that massive warehouse line is like, well, now we only give you this much because that's how much your asset's worth now, so that's some liquidity problems that we have, just like I said, trying to keep it as simple as possible. But
what was the result as far as how long it was taking some lenders to process then a regular mortgage when they had this flood of refis come on?
Yeah, we were locking our clients at 60 days, the refi clients, right? Because, I'll tell the refi client, just like I'll tell the purchase client, the purchases are more important. Not more important, we love you all equally, but the purchases have contracts that they have to meet.
They're deadlines.
Yeah, your refinance, you already have a house, right? Whether we close you on April 1st or April 31st, it makes zero difference to anybody, right? Yeah. So that's, so I lock the refis longer. A lot of those are still getting processed, but you run into another problem now. With the economy, with all these job losses that we're seeing, you have a more, again, let's just use U.S. Bank as an example. U.S. Bank has said, they'll come out and say, all right, so I don't know, let's say 1 million people in the first week of March submitted and locked a mortgage application to refinance, a refinance mortgage application. And U.S. Bank said, we're going to lock you in for 60 days. We're going to at 3.25, right? That's that's not, the transaction hasn't taken place, right? They don't get to stick that in their portfolio at that point. They're promising that client 60 days from now that they're going to honor that rate no matter what.
Okay.
Right. So let's say mortgage-backed securities go down and they lock somebody in at 3, but when they close the loan, the going rate for that mortgage is actually at 3.5, right? So what U.S. Bank has to do is U.S. Bank has to pay to buy down that rate immediately because they promised the client that they were going to get that rate. So what they do is they take the same amount of money and they short mortgage-backed securities. For people who don't know exactly what shorting is, you're basically betting against mortgage-backed securities. Just like you can short stocks, you can short treasuries and securities and stuff like that. So you're basically betting, and what banks do when they have that lock period, they throw an equal amount of money that mortgage-backed securities are going to do worse, so that if they do worse, then it's all equal, right?
Yeah. Yeah.
And if they do better, it's still equal. So that is a balance that all mortgage banks, all banks use, but they have all that short position with all of these applications coming in. How many of them don't have jobs anymore? How many of them can't close those refinance applications that they've already put in, right? So let's say 30% of those loans don't close because they no longer have jobs, right? And they're not going to. Maybe they were laid off, they're furloughed. There's something to where they're not going to be able to close those loans. Well, they've promised, they're waiting for that income on those locks that they've promised. But if that income doesn't come in, all they have is that short position that they still have to pay, right? So that's called a margin call. So U.S. Bank, there's some wholesale lenders that people that aren't common names, like United Wholesale and things like that are common to us, but not a normal mortgage holder. They've been writing checks in the billions for these margin calls on these short positions for loans that never closed. So they have to protect their own security a little bit. So we're not seeing rates as low as they should.
What does that mean for the person that their job is secure, they still want to make a purchase, they still want to take out a mortgage? What does that mean as far as the requirements that they might need to meet?
Yeah, and I think that's actually going to put us into today. Instead of what was happening 30, rates are still fantastic. We're still locking rates in the 3s. It's still great. There's still great rates out there. You can still qualify to purchase a house. What we're running into now, and the biggest, what should I say? I guess the hardest thing right now is we're running into is we don't know what this is going to do to the economy moving forward. We don't know when jobs are going to return. Heck, we don't know when we don't know when we're allowed to leave our house, right? And that uncertainty is going to put a lot of pressure on government loans. So we're talking about FHA, VA, USDA, a lot of the bond loans, like the down payment assistance programs and things like that. What people don't, another thing, people get mad, when the financial crisis happened. I'm sure you're going to see it in the news shortly. You'll probably see it in the news next week. The banks are going to get bailed out, right? And it's going to be a huge firestorm. You'll be able to talk about it on Facebook for 2 weeks, right? And argue back and forth whether or not we need to bail out banks, right? And but what a lot of people don't get is, so a government-backed loan, if, say I have an FHA loan and I lose my job, and especially if the government says no foreclosures for a year, right? Nobody can foreclose. We're going to do a mandate. You're not allowed to foreclose on these people. You need to just, give them a forbearance or whatever it is. If I'm U.S. Bank and I have these FHA loans that aren't being paid, I still have to pay them, right? It's not like I'm just missing out on a payment. I actually have to, as the servicer, I have to make that payment whether the borrower makes it or not. So all of a sudden you have billions and trillions of dollars of losses in the mortgage industry. So you are going to see a bank bailout. There's got to be some liquidity there somehow. In my opinion, the government needs to step in. If they're going to allow people to not make their payments, the government needs to step in and guarantee those payments somehow. Now, I'm not a senator or a congressman. I'm not even sure where that money would come from or if it's there. But like if we don't do that, the government loans are going to go away. And we're already seeing a tightening of it right now. Conventional is just going to be the way to go for a while. If you a plus 680 score, if you can qualify for a conventional loan, it's most likely going to be your best option. A sub 680 score, it's going to be tough to find you a loan.
Yeah.
In the short term. Do I think that's going to come back? Absolutely. Are we going to have is our economy going to come roaring back? Absolutely. But we don't know when, right?
So just to put the 680 in perspective, so we were looking at what 580, 620.
Yeah.
Typical qualification numbers.
Yeah, typical minimums, right? Was 580, 620, depending on the mortgage company you went with. Yeah. We're definitely seeing a tightening there. We were advised, hey, this is probably coming down. Anybody that you have right now, lock them in, right? If anybody that's out there looking that's on the fence, that doesn't have that 700 plus credit score, now's the time. Now's the time. We need to get it in and get it locked now. Or you might be sitting on the sidelines for a minute.
Yeah.
Right. And excuse me, that's not the worst thing in the world either. Right. If you're going to be buying, if you're buying, it's not the worst thing in the world to, maybe you're sidelined for 4 to 6 months, possibly. It's important to get your application in though. If you're thinking about buying a home in the next, I'd say 6 to 12 months, it's important to get your application in. Let us look it over. See what your options are now. If it's doable, would you think that we're probably coming into a buyer's market a little bit?
I think that there's definitely the possibility. It's going to depend on the specific zip code, on the location and the price range that you're looking at. Right now, I think you're going to see some very good opportunities. At the same time, Mark, we've been in one of the reasons we've had this consistent seller's market has been because of the lack of inventory.
Right.
And so, and where we are in Middle Tennessee, the fundamental reasons why people move here and why we've had one of the hottest real estate markets in the country for a decade, those reasons haven't changed. What's happened, there's a wet blanket over the whole economy right now with the coronavirus situation, but the fundamental reasons why people move here haven't changed. And we have an inventory problem. It's a shortage of inventory. So there is some supply that may still exceed demand, and in that case, you've got a seller's market, or some demand that exceeds supply, and you've got a seller's market in that case. But what happens? You were talking about this. Your comments about the way that the mortgage products are sold on the secondary market also seems to apply to landlords that are holding rentals, and you've got folks that are going to have to sell off some of their rental properties. If we see more and more of those come up, then that might be good for the first-time home buyers who've had a hard time lately. Maybe we'll see that first-time home buyer market open up some.
Yeah,
I don't know. If you've got a crystal ball, I'd like to know what it says.
If I had a crystal ball, I definitely would have been calling more people on March 1st if I had a crystal ball that everything was gonna cave in two weeks later. But yeah, no, I think the point to be made is there's still a strong appetite to lend. There's still money to be lent. I think you're gonna see. I always say that we get our money from the same place, right? Whether, like I said, whether you went to USA Lending, or you went to Churchill Mortgage, or you went, to another local mortgage company in town, we all get our money from the same place. But now it's going to be a lot different. And I picked up 2 loans last week from Navy Federal that had somebody pre-approved, and now all of a sudden they pulled their programs back, right? Yeah. So, I'm sorry, we don't have that program anymore, right? And they were big on their conventional 100% financing that Navy Federal done for the longest time. Well, somebody got, 2 people got pre-approved, and I lost them to Navy Federal. It was a better deal. It was a better program. I couldn't compete with it. So absolutely, go with them. If you have any problems, call me back. Well, they had problems. They called Navy. They went to make an offer. They asked for a pre-approval letter, and Navy Federal didn't have that program anymore because it's too risky to do, right? So that's a big thing too. But your conventional borrowers, very strong. Rates actually, we're direct to Fannie, so we don't have to worry about a lot of that hedging on conventional loans. And we're locking. I locked in somebody that just today with 3.25%, right? That's on a conventional loan. They had a great credit score, and they were putting some money down, but it's out there, and low 3s are out there for anybody with 700 plus credit, I would imagine. It's just those government loans, and it's going to be, I think I went off on a tangent there, but it's going to be one of those things that if you call somebody and they say, I'm sorry, you don't qualify for this. And we used to run into it a lot where maybe somebody was 640 or they called a lender. Maybe that lender's only going to do 640 credit and above on government loans for the next 6 months or a year, right? So they tell the consumer or the potential buyer that, I'm sorry, you need to get your credit score up to 640. Well, if they're at 620, we probably have a program for them, right? Okay. But they don't tell them that. They don't say, hey, go out and call somebody else. They say, get your credit up and call us back, right? Where you're going to see that a lot more with higher credit score. You're going to see 680 credit scores being told, oh, I'm sorry, we don't have a program for you, right? I'm not going to start naming names. There's some very prominent local mortgage lenders right now that have just stopped doing government loans altogether.
Okay.
If you called institution X, you're getting qualified for a conventional loan, and that's it. If you don't qualify for the conventional loan, there's nothing else being offered to you. And it's not that dire. We have those programs, and I know other mortgage companies do as well. So if you're told no, don't give up. Call somebody else. Is my advice, because those government loans that are still available, you can have a higher debt to income potentially and still get qualified. So in the short end of it, it's out there. You just, if you're told no, don't stop.
Yeah. No, that's good advice. You know me, I'm always encouraging people to shop around. And so, and for good reason, because one lender may not be able to take care of you, whereas another one can.
Yeah, absolutely. And it's not as easy as Bank A has better rates than Bank B.
Right.
Either, right? So if maybe you're a conventional loan, you have a 720 credit score, whatever your qualification measures are, maybe Bank A has better rates for those loans, but Bank B might have better rates for a different set of qualifications, right? So it's one bank's not always going to beat the other bank every single time. You're right, and there's definitely nothing wrong with shopping around. Whoever, if you need to be able to balance the terms of the loan with being able to get closed on time, right? You know, I'm sure you advise your clients. You know, let's say you have a pre-qualification letter from a local lender, right? That has their roots in the community and their, you know, and their reputation in the community, or you have a pre-qualification from, and I'll call out the big ones, from Quicken or, you know, Veterans United or somebody like that, where they don't care at all if your loan closes. They just throw it against the wall and see if it sticks. They don't care if it closes on time. They don't care if it closes because they're call center loan officers that don't, if it doesn't close, that loan officer is never going to work with Aaron Lovett again.
Yeah. I'm in the middle of one of those right now. Thank you very much.
Yeah. And, you know, and they honestly don't care. I mean, put yourself in their shoes. You wouldn't care either. Right. But if I have a loan, right, I want to work with Aaron Lovett again. Right. Or if you have a listing and one of my clients wants to buy your listing.
Exactly.
If I make the lending process hell for you and your client, you know, on one, you're going to be less likely to accept our offer. If I want, right. So that's why people should go local. And I just threw that in there unprompted. I apologize, but
no. I think it's a good point. We always prefer to see a pre-approval letter from a local lender, and it's not just because it feels good to work with people that you know. That's not really the reason. The reason is because we know the communication is better, the responsiveness is better. We're more likely to get an honest answer. And also, in my experience, when I look up the level of mortgage industry experience between local lenders and local loan officers versus those that are working for the big companies, there's no comparison. You know,
yeah.
I am in the middle of one right now, and the LO has not been in the business 6 months.
Mm-hmm. That's
and
very common.
You know, it's a challenge. It is.
Right. It's very common because there's still things I don't know, right? We run into obstacles a lot. And if that LO's, he's the blocker, right? He's the one that's supposed to know, he or she is supposed to know, all right, well, this person had a foreclosure this date. This person had a bankruptcy this date. This person had a couple 90-day lates. You know, is that going to be an issue?
Mm-hmm.
Can we use this child support income? Can we use this alimony income? Things like that. And without that experience, yeah, you're right. You don't know. And you know, I think that's the biggest thing. I always tell people, you know, whether I get the business or not, I say, if you don't use me, use somebody else that's local. Yeah. Use somebody else that's got a 615 area code, right?
Or 931.
Yeah, or the surrounding ones. Or the new one. What's the new one? 629 or whatever that.
Yeah. I just hung on to mine. I'm surrounded by 615, but
I always tell people that you can text me.
Yeah.
Right. If you got an issue, you can text me. I might not always answer at 7 o'clock at night. I'll answer an emergency. If I think I can answer you Monday morning or, you know, in the morning, I probably will. My time with my son is important. But if it's an emergency, you can text me.
Yeah.
Right. And
there are too many banking emergencies that happen after banking hours.
That's true. Or just a freak out moment, right? Oh my gosh, I didn't think about this. Is this going to kill my deal? Well, you can just text me and say, hey, I got a problem here. Blah, 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 blah. And I say, oh, that's not a problem. We're good. And then you don't have to stress about it all weekend. Just an example.
I didn't ask you, not to go back too much, but I didn't ask you what this is doing to the current situation has done with VA loans.
With VA loans, specifically. So VA loans historically have the lowest default rate out of any loan. Right? It's close to 2%. It's extremely low. Right? VA has a very good track record of their qualification standards and what they do. Unfortunately, VA loans and USDA loans, along with FHA loans, they're all under the same rules. It's called Ginnie Mae, but it's the government-backed securities that those loans fall under. So they fall under the same rules. I believe we touched on when on a government loan, the servicer still has to make that payment.
Yep.
Forever, right? So like if the servicer can't go into foreclosure proceedings or have some kind of ramification to get that money, they might have to make that payment for a year if the government shuts down, says, hey, you don't have to make your payment for, or we're going to guard against foreclosures for a year, right? Well, that servicer is going to have to make that payment if you can't. Just because you've got a VA loan that's got a very low default rate doesn't mean you didn't just lose your job, right? So VA loans aren't going away. I do believe that just like FHA, you're going to find a lot of investors or a lot of lenders out there that won't do VA loans again under that 680, 660 credit score range. Again, I think my best advice is get pre-qualified as soon as possible. See what your options are. Talk with somebody who's knowledgeable about what's going on in the market, knowledgeable about how the industry actually works, and ask them, what does it look like over the next two to 3 months, right? We're not Nostradamus. We don't have that crystal ball, but we have a pretty good idea about what's coming in the short term. And this is what's available to you now. If you went out and found a home in the next week, I'd be pretty confident that we could land you, right around whatever these numbers are that I'm sharing with you, right? Mm-hmm. And if that doesn't work, we'll just, hey, I'll put you on my hey, it doesn't work right now list, right? And whenever it does, whenever that stuff starts to open back up, you've already got an application and you've already done the hard stuff. All you got to do is I'll pick up the phone and say, hey, Jeff, time to go, right? You're good to go now. These buckets have opened back up. Or, what a lot of people are going to find is maybe that 620 to 680 credit score bucket doesn't completely vanish, but the closing costs are higher, right? So to hedge against future defaults in those buckets, maybe the investor that's going to take the loan is charging us more as a protection, and that gets passed on to the buyer in origination points or discount points. So maybe the closing costs are higher. They can still do it. Maybe we can get seller concession to offset that. Right? Maybe there's maybe a little bit less demand because we have some laid off workers. And what I think is you're going to have, for the longest time, for the last 3 to 4 years, that 225 to 275 sales price range, mm-hmm. been tough to get in Nashville, hasn't it?
Oh yeah. Yeah. Very competitive.
Absolutely. So would I be off base to say that might open up a little bit?
I think it will.
Maybe somebody that maybe they're capped at 250. Maybe that's all they could qualify for, or maybe that's just where they were comfortable monthly payment wise. That's where it made sense for them to buy a home. Well, maybe now is the opportunity. If you're still stable in your job and we can get you approved, well, maybe now instead of 8 offers, maybe there's only 3.
Yeah, I think that is exactly the right way to look at it. We saw through the showing services, we saw about a 20% drop in showings. Inventory didn't change. There are just fewer people looking at houses. Those are houses that are for sale. So you've got a better shot now at getting into one of those because there are fewer people looking, fewer people making offers. Mm-hmm. If you're ready to go, then you're ready to go, and go ahead.
Let me ask you this: what does it look like right now? As if I'm a prospective buyer, like as a lender, I can be anywhere, right? So I can barricade myself in my house and quarantine myself, and nobody needs to get around me to do a mortgage. We don't have to be face to face.
Yeah.
but that's not really true on your side, is it? Like you can stay 6 feet away, but you still have to be able to view a house, right?
Yeah.
What impact as a buyer, what impact does that have on me?
Well, part of it depends on the on the seller. So, for example, I've got listings now where we have a 3D 360 virtual tour. You can walk through that house. You can put on virtual reality goggles and walk through it if you want to.
Mm-hmm.
That's nice. When it comes to buying a vacant property, it's not so much of an issue. Obviously, we're still going to be 6 feet apart or more. My inclination is to say, if you don't want to get out of the house, don't get out of the house. Let me go when I know that there's nobody there, and in a sanitary way, walk the house and take a video. We can FaceTime, or we can do what we're doing now with the Zoom. And this is obviously for a serious buyer. That gives them an opportunity to look around and then proceed from there. But we have to be careful. For one thing, we've got CDC guidelines that are telling us to stay in place. If you don't have to get out, then don't get out. And I think the phrase now is don't be a vector. And so we don't want to be a vector. We don't want to do anything that could potentially possibly spread any illness that's going around. So we've got to be careful. But that being said, we're still able to do showings. My practice is to verify verbally that everybody that is involved, so the sellers, the buyers, and the agents, and anybody that's been around is not ill. There's no sickness. And then what we do it in a sanitary way, latex gloves and hand sanitizer, and we're just very, very cautious. But the reality is there are people that their lease is up and they have to move.
Right.
They've been planning to move. And so life doesn't end just because there's a pestilence, and there is a pestilence. It's no good. But we're as carefully as we can trying to transition folks that are in a situation where they need to move into their homes. So we're still showing. That hasn't been put on lockdown yet. If it is, then it will be, and I'll be the first to obey the directive. But right now, we're still showing. My preference is to show virtually if at all possible, and then if we need to take it to the next level and do an in-person tour, then we do it. We just do it in a sanitary way.
Yeah, maybe. I mean, or at least work your. What am I trying to say here? Whittle the list down a little bit virtually, right?
Oh, yeah.
So if I came to you and said, "Hey, Aaron, I've got the list of 5 houses." If it was 5 months ago, we might have jumped in your car and we would have gone and toured all 5 of those houses. Now we'll probably do a virtual thing and whittle that down to one. Right?
Yeah.
Or whittle it down to 1 and then say, all right, so this is the one I like the best. I think I'm going to make an offer on it. I just need to walk through it real quick.
Yeah.
We can still do that?
Yeah, we can still do that. The other thing that I would add to it takes us back to our pre-qualification, pre-approval conversation, and that is, and no agent should really be going out and meeting people that they have no idea if they're even able to make the purchase. But sellers and buyers are more than ever seeing the value of going ahead, getting pre-approved first, so that there are no questions, so that nobody is wasting their time, because now it's not just a waste of time. Now it's the possible contamination and getting people sick, and we're not going to do that. That's no good. So if I ask you, don't be offended if I ask you if anybody in the household's been sick lately, and also don't be offended if I ask you if you're pre-approved.
Right. Yeah.
Hey, go talk to Mark. He's a good guy. I've worked with him. He's competitive, and go ahead. It doesn't take 20 minutes to do it. So let's get the process started, so that we know we're not wasting anybody's time.
Yeah, absolutely. Well, we probably should, I think we're going on about 45 minutes here.
Oh, wow. Okay.
But
that's longer than expected.
Yeah, absolutely. Absolutely. One last bit that my clients have really been taking advantage of recently, and really been is our whole TBD approval process, right? And I think most people know the process of getting pre-approved, right? So they're going to go and they're going to go and talk to a loan officer at the bank of their choice, right? And they apply, they have their credit pulled. The loan officer can see the liabilities. We've looked at their income. Hopefully, have looked at some pay stubs, maybe some tax returns, depending on how their income's calculated. But normally, that's where the process stops, right? So I'll say, yeah, you can buy a house for $350,000 or $250,000, whatever it ends up being, and print off that pre-qual letter, give it to them, email it to them, however they're going to do. And most banks say, good luck, right? And then you go out and you look at houses and you place your offer. And once you have a bound contract, a signed, executed contract, you take that back to the bank, and that's when your application is actually submitted, right? That's when, and who's signing off on the loan? Not the loan officer, the underwriter is. That's the first time that the underwriter actually looks at your file. I can promise you, if loan officers signed off on loans, a lot more people would have mortgage loans. I can promise you that. And so in a normal situation, that underwriter isn't looking at it until you've looked at 10 homes, after you've put in, 3 or 4 offers, after you've done all this, and you finally got an executed contract, and the underwriter says, hey, we got a problem here. You don't have enough, you haven't been getting your alimony long enough to use it. You're trying to use child support on someone that's 16 years old, and they've only got 2 years left, and you can't use it for income. Those are things that everybody should notice, but it's an easy example. So what separates my pre-qual letter from, let's say, that loan officer at Nationwide, Nationwide lender A that's only been in the business for 4 months? What separates our letters? Well, if the listing agent doesn't know me, nothing, right? It's a piece of paper that says I can buy, right? Well, our process is a little bit different. We send people through underwriting in the beginning. So we have that pre-qualification talk. If somebody wants to make an offer right now, great, here's your pre-qual letter, go do it. But I say, I might ask for 3 or 4 additional documents, up front that somebody else might not ask for, but there's still things that you're going to have to do later on in the process with anybody. So I ask for it up front. Let's go ahead and get everything done. Let's throw it to an underwriter, have the underwriter sign off on it, all right? And when we have an underwriter sign off on a client that's still out there looking, we call them a certified home buyer. And I'll be honest with you, it's the name we made up. It means absolutely nothing except for the certificate that we give you, adding to it. We give you a certificate that says, client or home buyer A has been underwritten, has been pre-approved, and are now a certified home buyer. USA Lending backs up all certified home buyers offers with a guarantee to the seller that if we don't close because of something that we missed, we'll give the seller $5,000, right? So that first got pitched to me. We've been doing this for about 2 years. We've never written a check to anybody for $5,000, right? Because we know that it's already been underwritten. We know that it's our underwriter that underwrote the loan, and we know that the only thing that can stop this from closing is a bad appraisal or title issues, but those are all seller issues, right? Those would have come up regardless. So if I'm a seller and I see 5 offers on the table, 4 of them have pre-approval letters signed by a loan officer, and 1 of them is a certified home buyer that's already been underwritten, so they're further along in the process. They already pose less risk than all these other ones because the underwriter's already seen it, right? So if I'm a seller and I need to be in my other house in 30 days, which one am I going to take, right? I might take this offer might not be the best offer, but it's the most secure offer. It's the offer that's going to guarantee me that I'm going to be out of this home, right? On top of that, what other lender out there do you know of in the Nashville area, at least? What other lender out there do you know that is so confident that their buyer is going to close, they put their own money behind it, right? That's just not something that happens. So we do that with all of, as many as we can. You know, some people don't get us their documents in time. You know, that's nothing we can do about that. We have to put a full file in front of the underwriter. You know, they're not going to just sit there and guess. But our buyers make less offers because of our process. And I just wanted to end with that, because with the uncertainty in the market right now, you might want to close sooner.
Yeah.
You might want to be able to get to closing as soon as you can, because there's just, like I said, there's a lot of uncertainty there, right? So if you close in 20 days, you know, the uncertainty is only 20 days instead of for 30 or you know, whatever that might be. So I'll end with that.
What's the closing for your certified buyer?
Say it again.
How far out do we need to put closing dates for certified buyers?
I'd say anywhere between, I don't like to go less than 20.
Okay.
Because honestly, it's because the appraisal. The appraisal still has to take place, right? So if I have a certified home buyer, and if we're doing a conventional loan and we don't need an appraisal, sometimes that happens. You know, if you're putting 10% down or more, it's possible to get what's called an appraisal waiver. If that happens, we can talk about 15 days, right? But I usually do 21 just because we have to wait for that appraisal to come back anyway. But there's a lot of lenders out there right now with a turn time of 90.
Yeah.
Right now.
Well, and there are appraisers that are refusing to go into properties. I understand some are able to do drive-bys now before they had to go inside the properties. But
Fannie Mae loans will allow you to do that. So conventional loans right now, conventional loans will allow, on a purchase, will allow the appraiser to do what's called a drive-by, an exterior appraisal. And basically what happens is that appraisal comes in and we throw it into a computer and Fannie Mae scores it. If it scores a 1 or a 2, we're good to go. If it scores a 3, 4, or a 5, the appraiser's got to go inside. But many cases, if the appraiser does a good job, Fannie Mae obviously knows the comps because they're the #1 holder of all mortgages in the country. They know the comps. They've got mortgages that are comparable to the house that's being bought. If it looks legit, they'll score it low, and we can do it without that. But every other loan right now needs to have that interior inspection, and honestly, it's important.
Yeah, yeah. Well, and I think we've also seen with the tornado, a lot of appraisers are just plain busy.
Absolutely. Well, you have.
I wouldn't push that time too close.
Right. Not only are you busy because we're doing disaster inspections on appraisals that we already had done, but we're also, and so those appraisers are backed up. But you also have appraisers that are unwilling to walk into somebody's home, which is understandable, right? You need to be able to make that decision on your own. If you're not gonna work for a couple months, that's your choice. But we have less appraisers, right? And I was talking to somebody at my appraisal management company the other day. He said the average age he would guess, the average age of an appraiser is 61 years old.
Yeah.
And that's a problem. That's a problem that the industry has created. It's very difficult to become an appraiser. To do FHA appraisals, it takes like 4 years of apprenticeship to do that. I mean, you can get, so it's 2 years. You need to have a bachelor's degree and then 4 years of apprenticeship. If I'm going to be in school for 8 years, you're going to call me doctor, right? You know, and there's a lawnmower outside, so I apologize for the.
No, that's all right, Mark.
For the things, but that's pretty much all I got. I like I said, we're running long, but you know, anything that we missed on, anything that you want the people to know.
I think we hit all the points that I was hoping we would hit. Probably a good idea to tell the folks our names and how they can contact us.
Absolutely. Well, I'm Mark Sullivan. I'm sales manager for a local branch. We have our office in Metro Center right by the Nissan dealership. You might see Volunteer Mortgage Group or USA Lending. That's us. We're the volunteer mortgage group that, for USA Lending. So that's it. Me and Burke are the Mark Sullivan mortgage team. And I guess we can put our contact information wherever you're watching this. It's going to be like down here.
There you go.
Down here, maybe up here, over here somewhere. I don't know.
I'm wearing my contact information.
There you go.
Kind of. So I'm Aaron Lovett, and I'm a real estate professional with Weichert Realtors, the Andrews Group. I work out of my home office right now in Smyrna, Tennessee. Rutherford County and surrounding is my service area for the most part. And you can find, the easiest way to find me is at lovettrealtor.com. Lovettrealtor.com is my website.
Just like Lyle, right?
Just like Lyle, Lovett.
If you're a fan of Lyle Lovett, you already know how to spell this man's website.
There you go.
And yeah, I guess I could have said that too. It's applywithsully.com. So just like you're applying, apply with my last name Sullivan, Sully, SULLY.com.
All right.
And that's what it was. Good talking to you. I have about 6 loans to submit before I can leave today.
Okay.
So honestly, hey, let's end with some optimism. Guys, this is not going to last forever.
Yeah.
What I'm telling people right now, you've got there's a lot of people with a lot of free time on their hands right now, if you're quarantining yourself, you're not going out to eat, you're not going out to the bar tonight. Let's get an application in and go there. You can't hear me anymore, so we're going to go ahead and end it. It was good talking to you, Aaron.
Thank you. You too, Mark. Have a good one.